One of the market trends that we're going to deal with as traders on any time frame is the sideways congestion that's known as the distribution market trend. Now, distribution, I think, is an account killer. I've seen it, destroy many an account because within distribution, there's enough volatility to make the bulls feel very justified for being bullish and the bears feeling very justified for being bearish. Yet there's little follow through, there's little organization of sentiment and momentum and trend on a longer term basis to get the follow through outside the range and transition into some sort of trend. One of the most dangerous environments, one of the times you have to be very cautious about trading is when the daily chart is in a sideways range and you're looking for trades intraday. I think using the daily and trying to find some sort of directional bias is really the first step of your trade entry process, because understanding that dominant psychology on the daily is probably the most widespread or the most generally accepted way of describing whether or not a market's bullish or bearish. And so therefore, if you are shorting a strong market or if you're buying into a weak market, for example, if you are looking for buying opportunities on the euro US dollar, knowing that the daily chart is in a downtrend, just be cautious looking for potential buying opportunities intraday. I feel much more comfortable positioning myself in trading entries and trade entries that capitalize on a break of support, or having my back up against resistance where I can short into some sort of ceiling or an exhaustion level to the upside. So back to the Aussie US dollar, where what I'm looking at here is a market that continues to move in a wide sideways range. Now, I can actually trade this movement on any time frame as long as there is an identifiable floor and ceiling. Floor or, it doesn't have to be and, floor or ceiling at which I can say prices are likely to exhaust. If you recall yesterday's video, we did something similar intraday on the Swissy. Now, the ceiling worked great. Prices exhausted at the ceiling. Today's subsequent dollar weakness drove prices down through the floor. We keep tight stops on these trades because if a floor or ceiling is broken, we could actually be on the wrong side of the momentum. So the ceiling held up, the Swissy exhausted intraday at the ceiling, and then it exhausted, it did not exhaust at the floor. And you can check that out with yesterday's on-demand video. So here we have another situation. Resistance in the Aussie up against the ceiling. Now, the floor, I think the ceiling is fairly easy to identify. We obviously are omitting this area right here, but there's a lot of resistance between these two lines here. To the floor, if we look to where the market's exhausted recently, we're looking at basically a floor that looks a little like this. Again, so it's a wider range. I don't want to ignore these peaky highs, but I'm not going to hang on to a short taken in this zone to this area. I will take my hit and re-enter if I feel the market's still in a sideways range. My feeling is if we are to reach this uppermost level or low level here, there's a good chance, especially to the upside, that the market could transition into a trend and no longer be in distribution. So what I want to do is identify the near-term ceiling and floor, insert a stochastic oscillator. I like the 21 period, and there you go. Now, I'm not interested in the dual lines of the stochastic. You notice mine looks a little bit different. When you're setting it up, it's actually 2113. I'm actually just interested in that slow moving line. I'm not interested in the crosses. And what I want to see here is that as prices are reaching one of these floor or ceiling levels, in fact, what I like to do oftentimes is go ahead and color code my lines. I'm very big on this color coding. It just makes it easier in my mind to make a decision about whether or not prices are at support or resistance. It just, again, just keeps things very clear in my mind, especially when you consider that I'm looking at possibly upwards of 28 to 32 charts simultaneously, as I'm scanning through my multiple screens. So anything that's going to give me clarity, like my wave, like my grab candle plugin for this platform, like color coding my support and resistance lines and trend lines, again, just gives me a little bit more clarity as to support and resistance. So utilize the stochastic, look for the overbought reading as we reach a ceiling, look for the oversold level as we reach a floor, and use this stochastic as a filter to confirm that there could very well be a sentiment shift as prices reach one of these decision levels.